What's up, all my stock market homies? It's Kevin. In today's video, we're going to be talking about some penny stocks. 2020 was by far the craziest year I have seen in the penny stock and small cap space in my 10 years of being involved in the stock market. It was wild. Meme stocks. These small caps went absolutely nuts. They went to the moon. But what goes up usually comes back down, and over the last few months, we have seen these small caps and penny stocks come off the highs by a considerable amount. Let's be honest, they crashed. But they're coming into some key areas. The stocks we're going to be breaking down today, these penny stocks are setting up for a bounce, a move higher, and a retest of the highs. We're going to be breaking down 3 stocks that have pulled back and are setting up for big moves over the coming weeks. Let's jump right into it. The first stock that I want to talk about is ticker SENS. This is SYNS. SYNS, they are working on a glucose monitor. Diabetes, one of the most prominent diseases in the United States and the world. Can you imagine having a disease where you have to stick yourself with a needle every single day to measure your sugar levels, your blood sugar levels? That would be annoying. SYNS, they have this monitor they're working on, the world's only FDA approved long-term glucose monitor, lasts up to 90 days. There was a lot of hype around this stock over the last few months. It ran up from under $1, 35 cents a share, all the way up to $5.56. That was a 1,000% plus move. I got the chart pulled up on the screen. Let's take a look at it. So SYNS runs up from 35 cents. It's getting tons of hype, tons of volume, tons of momentum, but then we have since retreated. Now, I want to talk about this from both a long-term and short-term perspective. So from a swing trading perspective, this is a setup that I like to trade a lot. You're coming into the 200 EMA right there at the $1.80 level. I love to buy in front of that 200 EMA, which is the gray line in the chart. It adds support and it gives you an area to risk off of. We can see that we have held that level so far. We came down and tested it, and it looks like we want to hold. Also, we have an area of support from way back in March of 2018. Way back here, that area is also going to act as support. Prior resistance becomes support. Once you break over it, it now is support. So we have that $1.80 area to risk off of for a swing trade. We were trading at $5.56 a share. Now we're trading at $2.18. So just a move from 218 where we're at today back up to those recent highs, that's more than a 100% move. So this stock is setting up for a swing trade. And from a long-term investment perspective, this is a high risk, high reward type of stock. If this SYNS monitor gets into the market and it starts to take off, this could be a multi-billion-dollar company. People with diabetes don't want to prick themselves multiple times a day anymore. And if this monitor starts to take off, SYNS could be a multi-billion-dollar company and could have 1,000% upside. But it's also a high-risk stock. If you're looking to invest in this long-term, what I would do is I would put maybe just 1% of my portfolio in SYNS. If it works out, great. You make a monster return. If it doesn't, whatever. It's kind of like a home run or strikeout type of stock. But this is setting up for a really nice swing trade, and I'll be keeping my eyes on it over the next couple of weeks. The next penny stock that we're going to be talking about is another one that was getting tons of hype. NNDM, Nano Dimensions. We saw Cathie Wood come into the stock. It created momentum and hype and FOMO around NNDM, and we got the monster move. We got the monster move from less than $1, once again 50 cents a share, all the way up to $17 per share. An insane, crazy move. Cathie Wood and ARK Invest, they took a position. That got all the Cathie Wood groupies chasing the stock, and it ran higher. 3D printing is going to be big business over the next couple of decades. There's no doubt about it, in my opinion. You're talking about reducing the time that it takes to prototype a product, get it prototyped, get the design figured out, and get it to market. You're cutting that time in half or even more than half. So NNDM, I think it is a good deal at this level, right? Sure, there's more downside risk. When you're talking about a stock that has gone from 50 cents to $17, there's definitely more downside risk. But once again, we're trading right around that 200 EMA, and that is an area I like to buy in front of for both long-term investments and swing trades. So NNDM, similar to SYNS, is setting up for a nice swing trade, a move back from $8 where we're at today to up here to $17.89. That is another 100% move. So tons of potential with both NNDM and SYNS. And with NNDM, I do believe that there's also potential as a long-term investment. But when we're talking about these high-risk, high-reward type of stocks, we do need to realize that they could drop another 30-40%, and I would not be shocked at all. But I would also not be shocked if it goes up 1,000%. So the reward definitely outweighs the risk. When you're talking about a stock that could make 1,000% move, but the max it could lose is 100%, that's a nice risk to reward ratio. 3D printing is going to be a big sector. In SENS, diabetes monitors, we already know that's big business. And if they can get it right, we're talking about huge revenue. Let's talk about Zomedica, ticker ZOM, another meme stock. Got a lot of hype last year, ran up a couple thousand%, got the chart pulled up. We made a move from crazy 6 cents a share, 6 cents per share, up to $3 a share. A monster 5,000% move. If my math is correct, I think that was a 5,000% move. Just an insane move. There's Zomedica, the true pharma diagnostics equipment for veterinarians. It got a lot of attention from investors. You get to take the dog to the vet. Typically, it takes weeks to get that blood test result back. Trueforma cuts the time in half, makes life easier for the pet owner, and makes life easier for the veterinarian. So as similar to SYNS, this is one of those strikeout or home run type of stocks. But first, let's talk about it from a swing trade perspective. Something in common with all three of these stocks is that they're trading right at the 200 EMA, and that's very important. That is a great area to take a swing trade in front of. You use that area as your risk. If it breaks below it, you stop out, and we hope that it makes the move higher, right? So you have a defined risk, which is important. You've had the drastic pullback, a move back up towards those recent highs. That is a move of almost 200%. So we're talking about big potential. I think the downside has pretty much been put in, and it is a volatile stock. So you need to be aware this stock can move 30-40% in a day in either direction. Zomedica, I like the prospects long term. It's one of those things you put 1% of your portfolio in, and down the road it may pay off for you, but it also may crash. So we need to be aware of that. I like the Trueforma. I like the concept, and I think it's going to provide revenue for Zomedica. So we'll have to keep our eye on it. From a swing trade perspective, what I would do is I would risk off that 200 EMA, and I would set a price target up over $2 a share. Long term, this could be a multi-billion-dollar company, but it could also go to zero. So, risk reward. The risk reward ratio is there. If this becomes a billion-dollar company, you want to own it. If it goes to zero, whatever, you tried, you struck out. And if one of these three does make 1,000% move, if you own all three, two go to zero, but you own the one winner, you still made a bunch of money. That is the great thing about penny stocks, that the risk reward ratio, you may lose 2 out of 3 times you invest in a penny stock, but the one winner covers the 2 losers and then some. That's why penny stock investing is my bread and butter, and it's made me a ton of money over the years. Zomedica, NNDM, and SYNS. They're all three high upside stocks. Check them out. Do your own research. Do some technical analysis on them. Look at the fundamentals. I think all three have a lot of potential. That's going to wrap up the video. I love you guys. Check out the links in the description for Webull. They're giving you 2 free stocks, valued up to $1,850. And you can also now trade Dogecoin on Webull. Let's take a look at Dogecoin. It's making a big move today. If we look at the Dogecoin chart, pull it up here on Webull, it's making a nice move today, looking like it may want to retest those highs up at 46 cents per Dogecoin. We'll see if it breaks out and it can indeed hit that $1 per share mark. Catch you guys in the next video. Until next time, peace.